Step into the fascinating realm of industrial metals, where steel prices fluctuate and market indicators are the pulse of an ever-evolving industry. Welcome to Cup of Joe, the metal podcast paying homage to our founder, Joseph T. Ryerson. Settle in, savor a cup of Joe, and let the conversation begin.
Hey everyone, welcome to this special episode of Cup of Joe. I am Mike Carrazzo, joined always by Nick Webb. Nick, how you doing?
Mike, I'm doing very well. How are you doing today? Pretty excited about this one.
Yeah. This is going to be a really good one. You'll see on screen here, we have a special guest. We're going to stray from the norm on our episodes with the commodities updates and hone in on some talk around the some of the metal indices, CSPs talks that have been going on. So we're very excited to have Josh Spoores. He's the head of steel analysis in the Americas for the CRU. Josh, welcome to Cup of Joe.
Right. Thanks, guys. Thanks for the invite. I'm really excited to be in your metalverse.
Awesome.
I love it. I love the reference from the last show. He's been listening.
And Mike, before we hop into it, I'm going to give just a quick flash of our safe harbor provision before we get into the nitty gritty. But this is a reminder. These are the opinions of Nick Webb, Mike Carrazzo, Josh Spoores. These are not the opinions of the CRU nor Ryerson. But we've got some pretty good content. We got a lot of questions for Josh. We want to just get some more detail around what's going on with the CSPs, how they compare, how they may complement the CRU and some of the existing indices that are already out there.
Yeah, super excited. So let's level set the conversation first. So Josh, why don't you tell us about the CRU for those who may just have a tangential familiarity with it, right? What is it? What does it do? And then a little bit about yourself and your role there.
Sure. Yeah. So maybe I'll switch the order of that. So I've been in steel. This is the 20th year I've been in the steel industry. So I first was at a steel service center. I had my own analysis company. I worked at a steel mill. And then for the last 12 years, or just about 12 years, I've been at CRU. So for 10 of those years, I've been the person that does the forecast for North America, the analysis, and the weekly price every single week. So well-versed in what's going on with the CRU price, how it is made up and all of that. So just generally, CRU is a market intelligence company. We focus on metals, mining, fertilizer, commodities. We have some expansion in some of the battery metals more recently, but it's a company around for over 50 years, owned by the same owner that started up, still comes to the London headquarters virtually every day. Okay. So it's a company that, like I said, it's market intelligence. So we deal mainly with manufacturers, the mills, producers, miners, banks, hedge funds, all that sort of fun stuff. First part of the question was really more so about the price, what it is, and for the most part, it's our price is published every week. It's every Wednesday. It's reflective of actual transactions from the prior week. So there is inherently a bit of a lag with it, but that lag is actually what we've been told. It's been told as a selling point. So that's what allows our contract to settle contracts or to sell the futures market, because it's a reflection of what's actually taking place rather than, what bids and offers might be or market sentiment from day to day.
So it's fair to say anybody who's purchasing steel is looking at the CRU price on average,
yeah.
Correct?
Yeah. I mean, it's you look at any kind of earnings transcript or earnings calls from the public companies and they talk about a steel price, it's the CRU price, just for that.
So, and this is kind of the crux of our conversation here is this and these CSPs. So before we kind of get into it, would you mind defining what a CSP is and how it differs from what the CRU offers?
Sure. Yeah. With Nucor announced, I think it was April 4th of this year, the CSP, which is just their acronym for the consumer spot price. So it's a price that they are offering. They publish it at the beginning of every week, and it's valid for the week to say that it's a price they will charge for lead times of 3 to 5 weeks for anybody to buy steel. Not it's their customers, but anybody that maybe isn't a customer that could go to them because they need steel, it's a price valid for them. So they announced one. We're recording this on a Monday. They announced one this morning. It's valid for this week. The following week, when our price publishes the CRU price, that will show you a good view in terms of what actual transactions took place in the week, not just what Nucor booked.
And is it fair to say that at this stage we're now 6 to 8 weeks into the CSP, and Cliffs has an index as well? I guess I don't know if this is something you can share. We're kind of getting into the details already, but do you see the actual data flowing into your system that's showing that there are transactions going through at these prices that are published? You're kind of making the cake with the data that you see.
Right. So we get data in generally Mondays. We process it on Tuesdays and publishes on Wednesday. So when we see the data come in, yeah, it's a scattering of prices. The range will move from week to week right now, and recently the range has been pretty wide. You have some on the high end, some small orders, and then some bigger ones on the low end. We've all kind of heard where some of those are, but yeah, we'll see numbers around the Nucor price. We've not yet had our price reflect the actual Nucor price, but I'm sure it'll happen. It's inevitable, just the way the prices work. It'll be a tighter range probably, but yeah, we see it all come in.
Which I think makes some sense, right? Because Nucor is obviously a very large player. Cliffs is a very large player within the steel market, but there are other mills who are transacting on steel prices. I would say most likely at prices that are going to differ, which I think makes some sense for why maybe the CRU is kind of an amalgamation of the entire space, not just the 2 or 3 big ones.
Right. Yeah, we are a volume weighted average of all the data points that we get in for the week. And our data providers are the majority of domestic producers, and the balance is buyers. So it's service centers predominantly, and then some manufacturers in there as well. So you would need to see just the math work out right for the prices to be equal, but they should be pretty close, I would imagine, if that's truly what's happening. And I guess that's the crux of it all, is it's what's truly happening is what our index is designed to show.
And to clarify that, so Nick, you had mentioned one from Cleveland, Cliffs. Now they publish monthly, and is that considered a CSP as well by definition?
I would say technically, yeah.
Okay.
It's got slightly different parameters on it where it is subject to change. I don't believe that they specifically reference the 3 to 5 week lead time, but yeah, in general, the spirit of it is very similar, I would say.
Gotcha. Yeah. Okay. For us, it seemed like Cliffs was kind of reactionary to all this in terms of what that is. And as their order book opens up, that's when they open that price up. So far, it's been on the high side. And, as much as the CSP might be kind of a ceiling price, Cliffs came in ahead of that. So we'll see over time how that evolves. I've heard a rumor it might go to weekly as they spend some more time with it. But if not, I think the biggest issue really is it's Nucor and this weekly price that they've clearly put a lot of thought into it to work with their market.
So Josh, you talked a little bit about the lead lag relationship between the CRU and potentially some of these CSPs or just market prices in general. Is it fair to summarize that by saying that generally, just mechanically, the CRU would be a lagging function to physical spot transactions that are going into the market from a prior week or maybe even prior 2 weeks? Is that a fair?
Yeah, but the way it's designed is it should be a lag of a week, but sometimes there's cases where because our data comes generally right out of the your order book software for the week.
Okay.
Whether you're a producer, you're a buyer, you have your reports that you run that says this is what transacted last week. You take out your one-offs, your contract orders, or things that aren't repeatable in the I guess in the realm of the steel world, and that should spit out a price. So inevitably you might have something that was talked about on a Thursday and Friday and wasn't fully closed out, PO ordered, issued until a Monday, and that might lead to a little bit more of a lag, but generally it's about a week.
Okay. A question for you with regards to differentiations between CRU and some of these indexes that are coming out. CRU obviously publishes a hot roll index, a cold roll index, a galvanized coating index. You have a plate index. So thus far, these CSPs, both from Nucor and from Cliffs, are only referencing a hot roll price. Any thoughts on why they're just doing hot roll? Is that just that's going to represent the entire carbon complex? Or I guess what are your thoughts around them just having a hot roll index, not the value added products?
Right. Yeah, it was a little bit of a surprise when they only talked about a hot rolled price. I think over time what we've seen is it really allows, I guess I could go back a little bit. When previous to the CSP, they would announce a price hike, and sometimes they would announce a minimum price. Sometimes they would just say prices are up $50 a ton. And when they announced specific prices, they would talk hot rolled and cold rolled at times. So it was kind of a surprise they didn't list a cold rolled and galv price. But I think what it gives them to not do that is a freedom in terms of what the spread is. It's generally cold rolled is going to be some spread over hot rolled, depending on that specific market dynamics. And then the same on galvanized, whether it's a hot rolled substrate or a cold rolled substrate. So I think it all works in the whole realm of carbon.
Okay, excellent. Yeah, perhaps not coincidentally, or I guess we'll see over time. But it is worth noting that the futures market that trades on the Chicago Mercantile Exchange, there also is only a hot roll futures market. Although I guess there's the premium contract now too, which represents the coated space. But for the most part, the most actively traded contract is still a hot roll market. So it is interesting. Even this morning, and I think it's worth noting, we're doing this recording on June 10th. So any prices, any specific numbers that we're referencing, it's as of this day. And I think that's important because, we're going to see deviations depending on the day and time, whether, Nucor is above a certain index or Cliffs is above a certain index, or, CRU is wherever it's pricing. But, we are seeing those spreads bounce around pretty volatilely. And what's interesting is, when these numbers are getting reported, for instance, like the Nucor CSP number, it does appear to be having a pretty quick feed through into the futures markets. So for instance, today we saw print lower by $60 per short ton, from 780 all the way down to 720 on that hot roll index. And notably, we did see futures markets correct lower today. And I think it's reflecting upon that publication.
Yeah, absolutely. When it came out, I took the screenshot of the futures to say, okay, this is where we started. And you can keep that as a reference of where the futures is versus what Nucor does. So yeah, today was interesting. I didn't think they'd drop it as far as they did. I did think they'd bring it down. They did the same thing last month, and then they started to raise it 2 of the 4 weeks since then. But I think one thing that they've been going for, and I've written about this in an insight that we put out in May, and if anybody's interested, you can just go to crugroup.com, crugroup.com, and it's under knowledge and insights, just filter by my name. But I think what Nucor was looking at was how do they get away from this boom bust order cycle where when prices get low, their customers order 5 months of steel at a time, and then they don't order anything for 4 or 5 months, and then they come back into the market. And they wanted to create something that's a little bit more level. So I think where we are is our price this Wednesday, it's the second Wednesday, it's going to set the July contract for variable contracts based on our price. And if you think about that as maybe a 6% discount from our price, that's a $720 steel price, depending on where the price comes out at tomorrow or on Wednesday. So I think Nucor is trying to get ahead of that to say we don't want to see a buyer strike. We don't want to see buyers just wait and not order anything for 2-3 weeks until that contract is ready. We want to entice them today with a somewhat transparent price, a known price.
So yeah, I want to dig into that a little bit more, because I think our viewers may not know quite the level of depth that we're going to get into here. But you mentioned this idea that this week's CRU is going to set July contracts in a lot of cases. I think it's worth noting that a lot of service centers, a lot of big OEMs, their contracts are based on the prior month, second Wednesday CRU index. That's oftentimes how these contracts get set. And we're in an interesting week right now because, as Josh had kind of alluded to, I think, this number that got published today, based on the way the CRU compiles its index, it arguably will not get fed into the second Wednesday price. That second Wednesday price is going to be based on any transactions that went through last week. So I guess there is a little bit of a question, and there is a question in here, which is, do you think, and I don't want to use the word manipulation, but do you think there's a possibility that influencing the timing of these publications for the CSP could impact either higher or lower the CRU and the way the CRU publishes its second Wednesday contract?
I think there's definitely some thought into the timing and the price movement. I think the biggest amount of that I guess, strategy of the timing in this instance so far seems to be to smooth out the order variability, just the flow of orders. So I think that's where they got aggressive last month. They did the same thing, and they're doing the same thing this month with that low price early on in the month. But yeah, if you look through the history, and like I said, I've got 20 years in this. Nick, I know you're very well versed in this, and I can see a lot of different data where you see at times when mills typically try to raise prices is around when they announce earnings. So they have something good to talk about if it's not all, rainbows and unicorns at the time. So I think there's timing that does work strategically. And in terms of, you have a wide audience here. I would think that it seems strategically better to base a contract price off of at least 2 weeks of data. You could do the first 2 weeks, and you're going to smooth out some of that volatility. And I think you're just, well, it may not be a perfect double in terms of data points coming in, but it's almost double that data point. So I think that might be a better way to go rather than just rely on the 1 week a month.
Yeah, very fair. Yeah, so I guess from a high level, how is the CRU? I guess, is the CRU excited about these indexes coming out? Does it add more to talk about? I guess I got to imagine this is creating a lot of new types of conversations for you and for the organization, because there could be some impact to the ultimate, the indices or the way things get published. I guess, how are you viewing these new indexes coming out?
They're very interesting for sure. I mean, it gives us something, different on Monday to think about where it might be, and then to see where it is and what it might mean and why. But I think overall, I think what Nucor is doing is they're driving more attention into the spot market, which I think is more impactful to CRU. Yeah, we have, was the research we had conducted was that 95% of people with a market-based contract choose the CRU price to settle their contract. I don't see really anything changing in that manner. I think more so we might see more volume come into the spot market that can further enhance the spot price that we do assess. So I think it's a good thing for us. I think it creates more volume in the spot market, where in the past we had seen a lot more volume move into these discounted contracts, where, there were periods where some buyers shouldn't be getting those contracts just because of who they are and what they do, but it was a way for mills to lock in known volume to their customers and lock in market share.
Could we maybe see a time where other steel mills jump in the fray and are publishing their own, and you're going to have a lot of different ones then to choose from or to look at?
Yeah, it's such an interesting question, because right now it's Nucor's doing it the most. Eclipse has their buy steel price. That's fine. So far it's monthly, maybe it goes weekly, but I think Nucor is the most transparent in what they're doing with it. So if you have, say, Big River wants to have their own, or Steel Dynamics wants to have their own, they can't all have the same price because that's collusion, of course, but they would be some mishmash of different prices. And I'm not sure there's any real big benefit to that and what the point is. I think more so it's really, I think it just strengthens the CRU price over time, that it's always going to be, well, Nucor says this, what does CRU say? And you have that lag, which I think works in our favor to understand, last couple of weeks, Nucor is trying to get $780, and our price had fallen down towards just under $760. And we all heard, different price points in the market as well, but I think it was more of a check in terms of where's the market trading versus what Nucor is trying to accomplish there.
So Josh, with regards to the construction of the CRU index itself, since these CSPs have been launched, have you noticed any changes in the trend of the range between low prices and high prices? Have you, or has it tightened? Has it expanded? Has there been any statistical impact that you can note thus far in, let's say, the first 2 months of these being around?
I don't know that we've seen anything really different just yet. We had a couple weeks where I think the range was a little bit tighter, and then most other weeks it's been pretty wide. So no, we haven't seen any period where the majority of data points were at that Nucor price. It's always kind of scattered in terms of who the buyer is, and the buyers are reporting typically more than one purchase a week from multiple mills. So it will vary from week to week of what they have.
That makes sense. So question for you on the 3 to 5 week lead time. at least within Nucor's CSP, the way it's written is it says for any volume, and I believe that's 1 ton up to 10,000 tons, they are essentially saying we will stand by this price for the next 5 business days. And they also note a 3 to 5 week lead time for that material. Now, I think we've fortunately been in a situation where the environment is such that lead times for the last 8 weeks have been fairly lean. Mm-hmm. But I guess the question would be, if in the event things change, we get another supply chain issue, we get a large, let's say, stockpiling of OEMs, the service centers buying a ton of material, and lead times happen to extend across the market. Just an opinion or a thought, how do you think that plays out with this guarantee of a 3 to 5 week lead time if the market more broadly lead times maybe extend out to 8, 10, 12 weeks? How do you think that plays out?
Those 8, 10, 12 weeks, that was such an anomaly after the pandemic, but it very easily, 3 weeks is really short. We really don't see that often. You'll see it fall under 4, but 3 is short. And often you can see it push over 5 pretty easily as well. So I think it really does bear watching. What we've picked up insight so far from a variety of sources saying not all Nucor mills had that availability. It was only available at some of them. And so inevitably, we're going to come on to a period here in the next couple of months where we may very well see that inventories get destocked too low and the economy starts to turn higher. Industrial demand starts to pick up a little bit, to a more healthy rate in the fall. And you can have that surge of orders to order for demand and to order for building some inventory. And we can very easily see lead times push up to 6 weeks. So it really bears watching what happens with this lead time, as it goes. The whole thing could just kind of, I guess it could break, or you really need to see Nucor manage their order book in a way that allows this to consistently show availability for their customers.
There. So there are times when, whether it's a service center, maybe a larger service center or a larger OEM, sometimes they'll take package deals of, rather than taking 500 tons to one mill supplier for a price, they leverage together a much larger buy and they say, let's see what the best number is that we can get in the marketplace. So that maybe they go out for a 2,000 ton order, a 5,000 ton order, with the expectation that they should be able to negotiate a bit harder on price. Do you think that having these, transparent CSPs, I guess, throws a wrench in that plan? Because again, ideally, I guess in this scenario, the CSP says whether it's 5 tons or 5,000 tons, it should theoretically be the same price. So it kind of throws a wrench in that ability to sort of leverage, large buys. I guess you have any thoughts around how that could potentially change?
Yeah, I can see that bundling happen more so for contract orders to create a bigger, source of demand for that monthly contract order. But I think it could still work. I think most people so far seem to think the CSP is a ceiling price. And as far as we've seen, Nucor's been pretty strict with it in terms of negotiations. I think they've held pretty firm on it. But it's the other mills. There's a number of other mills that would probably want to say, yeah, capacity is rising, demand's not that great. We want those orders. And you're talking different heats of different orders. So I think it all works well from a mill production point of view.
Yeah, it is interesting. There's almost a perverse scenario where if somebody's number is transparently put out in the market, there are other mills who may see that as, well, we at least know what our bogey is. We know what we have to compete against. So there is an interesting dynamic there from a pricing standpoint for sure.
Yeah, we think it's going to get interesting too over time here. The market cycle will fluctuate, and as we see prices fall down, I think there's going to be a point where Nucor just decides not to fully participate in the market, and they can hold their price steady for a few weeks. They can let their competitors take that market share temporarily. They essentially rent it out to them at low margins, and that could clear up the order book. That could give them the capacity to do a little bit better here going forward as the market comes back.
Which could be the phenomenon we saw taking place for the last few weeks, where the CSP number was 780, mm-hmm. And then it dropped, and maybe that was a signal that they wanted to win a little more business potentially.
That very well could be it. Yeah, we've heard of others being pretty competitive in the market at pretty low prices. So and that may very well be it.
Okay. So Josh, I know in addition to constructing the index itself for the CRU across all the various carbon products, we know that you also wear some hats with regards to forecasting and pricing. definitely want to get your opinion or your thoughts on, where's CRU stand? Where does Josh Spoores stand with regards to where are we heading for the balance of the year? Where's CRU think, carbon prices, whether it's just hot roll or, the whole gambit of products, where are we heading from here through the end of the year?
Right. Careful, this could drive futures prices. This could have a big impact. Careful what you say.
Josh Spoores moves markets.
I have before, yeah. We have a conference in August. So CRU owns Steel Market Update. It's a huge steel conference, and we generally give forecasts at that point in time to talk about the year ahead. And last year, for the key point that I had was that 2024 was kind of a challenging year. It's one to kind of invest through and think about planning for 2025 when demand starts to pick up and rise faster. And I think that's still somewhat the case. So it's still our view that we should see industrial activity pick up faster next year than what we've seen so far this year. In terms of where prices are, our average on hot rolled, and bear in mind that we are working on we update our full supply demand forecast quarterly. So we're working on that right now. And we'll have that update out in a couple of weeks. But the price on hot rolled is just under $750 right now for the second half of this year. And then it goes higher for next year. So I think there's, that's the sandbox, I guess, we're playing in. I think there's the opportunity that we could see prices dip down, maybe even drop below 700 very briefly at this point, just the capacity coming online and some of that flatline industrial activity. But like I said, I think there's the bigger opportunity is what happens when demand does start to improve later this summer and inventories are at a low point and buyers need to purchase for not just demand, but also to rebuild inventories that get too low. So you could see that cycle start to turn pretty quickly. In terms of plate, we've got plates. I think that's made, talking points on your podcast here. We have it, I think I wrote down a cheat sheet over here. 1,074 for the second half of the year, so pretty flat to where it is, maybe a little bit lower than where we are right now. So yeah, that's a nice spread that you have then between plate and hot rolled, but of course they're separate markets and different suppliers, different importers, different areas of demand.
Yeah, we've talked
about
Patrick
that.
Dempsey on.
Yep.
Yeah, we had Patrick Dempsey on our podcast. Maybe what was that? Close to a year ago now.
Probably about a year ago, yeah. And we.
I was kind of hammering on the idea that plate prices are so far out of whack from the hot roll market, and his response to me was, "Well, why should they be in line with one another?" He said,
absolutely,
markets.
Yeah.
Same, different industries, different use cases. That's what.
Where can you import it from? And even if you look at just the last 4 years of history, that spread of plate to hot rolled, I think it's been like a negative 400 to close to $1,000 over hot rolled. It was just it's just been bonkers, and it clearly shows they're very different markets. You can't really have any more substitution than you already have in those. And Steel Dynamics with their Sinton line, they're producing a little bit more of that coiled plate up to an inch thick. So that helps a little, but generally you want a 2-inch plate, you're limited in where you can get it.
So not only are we getting schooled by McDreamy, we're also getting schooled by Josh Spoores. So love it.
Yeah. I think they both hammered you on that one. So you gotta move on from your hypothesis.
Well, we get asked that all the time too. So yeah, we're well versed in answering that.
And Josh, with regards to the spreads, we were talking about the plate versus hot roll spread. Similarly, I'm curious if you have any thoughts on, will we see any normalization between like the cold rolled coated spread relative to hot roll? Because that's been a pretty elevated market for the last, really the most part of the last 3 or 4 years, really.
Right. Yeah. So I think right now what we're looking at is capacity on hot rolled is the biggest issue. So as more capacity comes online, Sinton's further ramped up. We'll get Big River 2 later this year. I think that further weakens hot roll prices relative to cold roll prices. And then still you have galvanized capacity ramping up as well. And so you have this weird mix where base cold rolled is higher than base galv and many times. And again, that's just your specific market. So maybe you could find a G30 galvanized coating that works for a cold rolled application. But with the spreads, we expect the cold rolled to hot rolled spread to start to come back. 200 seems like a good number, but it really is at the whim of how much competition there is for hot rolled and how low hot rolled goes relative to what cold rolled is. Cold rolled is a pretty small market too. I think it's only like 20% of the mill shipments versus hot rolled and galv each about 40%.
Hey, Mike, I'm not able to get your audio at the moment.
Yeah, I couldn't hear that either.
There you go. How about now?
All right.
Yeah, you're back.
New mic. I was saying, speaking of galvanized, any insight or direction on where you think those prices might be headed?
Generally, the way that we're forecasting is we forecast hot rolled, we forecast the spread for cold rolled, and then the coating weight on galvanized. So as hot rolled moves, generally it's the same sort of trend that we see on cold rolled and galv.
Gotcha. Okay. Right.
Mike, I think I've gotten the bulk of my questions answered.
Yeah.
Yeah.
And Nick, still being well versed in these markets, I said you take those. You can add all the context you can to those, but this dang mic. Got a new microphone and it's acting up on me here.
Well, sounds good.
So, Josh, I guess leaving with our listeners, what should they really be taking away from this conversation? I mean, they're trying to navigate what this all means, and we appreciate you coming on and helping us clarify this a little bit. But I guess we're probably heading into contract season very shortly here. What should customers or metal buyers in general just take away from this conversation as they try to navigate?
Well, I think the biggest point with Nucor's CSP is it's a new data point in the market. It's something you can reference at the beginning of the week. It's not really at a lag. And I think they're being pretty consistent in their efforts to be competitive with the market. We'll see as it goes, see how it really works through the whole cycle. One question we've had is, will this price set contracts? And I talked about it briefly in that insight that we had put out. I really don't think so. I think there's maybe you could have a small portion of Nucor contracts getting adjusted on it, just because relationships in the steel industry are so important to make sure you get the supply you need at prices you want as a buyer. But you can't see all the other mills setting a price based on what their competition set. So I think maybe we see some movement around in there, but it really, what we found is it doesn't matter what you set prices on. At some point, as demand, supply, negotiations happen, you're going to get back down to whatever level you are. And I know you guys have talked about like a fair value, like a scrap plus 250 or a scrap plus 300. I mean, generally, you're going to see that over time, as cycles move around. That's just where you're going to get to. So there's specific mill margins that you have to hit for them to earn enough capital to reinvest in their business. And I think that's really where we kind of go with it.
And if the last few years have taught us anything, the best laid plans go awry. So
That's right.
Expect the unexpected. Josh, you mentioned a few times the insights that you publish. Had a chance to look at those. They're very, very insightful. Can you mention again where people can find those and maybe how often you put something out?
Yeah, those are just at our public website. It's crugroup.com. And I think on the right side of the page, you just click knowledge and insights and you can search by my name. And other than that, I'll try to post some things up on LinkedIn. So yeah, if anybody has LinkedIn, just feel free to connect there.
Yeah, Mike, I don't know if I told you this, but when I was first getting started in the steel industry, I was on the brokerage side, and I would occasionally receive this weekly report called the Spoores report from one of the service centers here in North America. And honestly, it was extremely useful to just get my feet wet and get used to the industry and get familiarized with the main drivers in the industry. So yeah, Josh has been out a while, but he's been helping people in the space for a really long time. So again, I'll reiterate what Mike said and say thank you. We know you're extremely busy. We know these are busy times for index providers, and we really appreciate your time today.
Yeah, thanks for having me on. Always a pleasure. It's great to talk to you.
And if I heard that right, you taught Nick everything he knows about the metals market, right?
That's a great place to end it. Yeah, I like that.
Exactly.
I don't think it's true whatsoever.
Just send that straight to your boss.
That's right.
Thanks, Josh.
Excellent.
All right. Thanks, guys.